Okay, here we go. Hello and welcome to Daily Market Mastery episode number 14 with me, Christian Rauchenwald, where we together take a look or use Elliott Wave Theory to try to predict the price and market movements of certain stocks and indices. And we're gonna start off as usual with a quick reminder. If Elliott Wave Theory is new for you guys, then go and check out episode number 1 of Daily Market Mastery, because that's where I covered most of the basics. Also check out the video description down below, because there you can find links to reading the Elliott Wave Principle book online for free, or getting a physical copy, which basically covers Elliott Wave Theory in detail, and also links to the one-page cheat sheet that we're using regularly to save ourselves time looking up stuff on in the book. Last but not least, if you are curious about like market mechanics and other stuff that is relevant when you are investing long-term and not day trading, I recommend that you grab yourself a copy of Naked, Short, and Greedy by Dr. Susan Trimbath. That covers basically the big issue in the US markets or global financial markets, which is failed to deliver and naked shorting and the impact it has, and what she's done in the past to try to get some things changed, and how those efforts worked out so far or didn't work out so far. It's really quite an interesting read, especially if you don't yet understand the full difference between holding your shares in a street name at your broker or holding them in your own name by directly registering them. So yeah, with that, I just have to quickly finish up a message, or basically check the reply. No, that's it. Yeah. And so just had to fill out some tax paperwork real quick online, and it took a moment longer than expected. So can close this, can close that. That goes here. That we can close. That we can close. And then I can actually close the laptop. And yeah, now, other than that, as usual, the regular disclaimer that you can also see at the bottom of the screen. Everything that I share in this video / live stream reflects my personal opinion and is in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Yeah, that said, we are ready to go. So to summarize that, basically, I'm sharing my opinion. If you then decide to act on that opinion without doing additional research, that's on you, not on me. So just like if you, based on my opinion, make a huge profit, I'm not gonna, try to collect a share of that profit. If you end up making a bad decision, losing money, because I'm also not always right, I think nobody is, then not my fault either, because you make your own decisions. I'm just sharing the journey I'm going through with Elliott Wave Theory. Anyway, with that, let's jump to the desktop real quick. That should work. Yeah, and I can actually hide the message now. Probably have to rearrange that. So 1 second. So what should be the chat overlay? Should probably be. Is it that one? No, that's not the chat overlay. That's the chat highlight. Okay, that we should probably, let's do it like this, so I can, in case I forget to move the camera, that at least the message that I want to highlight is visible. If you're wondering how you can get your message on the screen, just ask your questions in the chat. However, the chat should be set, if I'm not mistaken, to subscribers only, which means you'll have to be subscribed for at least 1 day. So if you're not subscribed yet, hit the subscribe button, and don't forget to like the stream. And then in tomorrow's episode, or whenever the next episode is, in this case tomorrow, you can then just jump in and ask your question then. Now, as usual, we start our day off with a quick summary. Over the last couple of episodes, so more than a decade now, we've looked at the SPX, where we are still in a waiting position. Right now, the price is moving in a direction, and we'll have to check here. What was it? Alt-D, details. Yep, there we go. I'm starting to remember those shortcuts. And here we have a high of 4,169.48, and that high here was 4,195, again 4,169. So we're still below this point, so this labeling still holds up, although considering how it's going, I think it will turn invalid. Like we are pretty much almost 100% retracement here. So Yeah, as said, I wouldn't get worried if we go up to 4,260. It would mean in my portfolio some temporary loss. Yeah, I mean, this year so far looks a little bit scary, but if you put it in perspective, my overall performance proves or shows that at least historically I knew what I'm doing. So I assume I still know what I'm doing, and am confident that basically that's just temporary, although no guarantees here. And yeah, so there we're still waiting. In the NDX, we have the same situation. We don't know. In the NDX, we didn't make a decision where point 2 was. But yeah, probably we still will see. So if we go back to the SPX, we probably will still see the 4,260 to 4,325 range. I mean, not saying that I'm convinced that it will happen, but considering how it's going, that would be a likely scenario before we then actually have our market crash, or basically not market crash, but move further down. And in the NDX, it will be similar, in my opinion. So we might see, yeah, like the 13,720 or 13,990. Yeah, I mean, that's a couple percent still up. Yeah. Not sure. Again, since like I'm fairly confident that we will move down further, I'm not fairly confident as to which price exactly will hit. So opening a long position here doesn't make sense to me because I don't know where exactly it will hit. I'd rather probably just eat the temporary loss right now while we wait this out. And yeah, now Shopify, our position, let's see how did we do there. So basically, yeah, let's zoom in, and we are there on the 2-day frame. And then if we go in the portfolio, we can see that our Shopify position is currently in profit. We opened that during one of our streams, so it's not looking too bad. We have 2 positions. At some point, we even doubled down, both of them in profit by now. So confident. I think like that will play out fine, although it's a multi-year perspective here that we consider here basically that it will take some time for us, but should be highly profitable in the long run. Once we have some kind of pattern here confirmed, which we might already be able to confirm something like a 1, 2, 3, 4, 5 leading diagonal that becomes a 5 not completed yet, that becomes a wave 1 here with a then small down draw here again, and then yeah, like going further. So that one we probably will hold for a relatively long time. The benefit of creating a sub-label, again, 1, 2, 3, 4, 5 in progress as a leading diagonal would mean that we could adjust our stop loss to a higher point. Not sure if it would already be in profit. Considering that this is a long-term holding, I'll just not do that and just wait it out, even if temporarily we fall a little bit lower. Black Knight Inc. was the next thing where we hold a position in, and if we check real quick, we can see back here. So go back. We can see that that one is currently at a loss. We also doubled down at some point. Both positions are currently in the red. Like there, it's still fine. Although that second turn down here might indicate that our corrective pattern is actually wrong, which would then, however, also, we have our stop loss at 52, so we're still within the range. And to be fair, like while our position is right now, as we saw in the red, so the middle one in the portfolio, overall our risk reward ratio is still good. I don't see a need for adjusting anything here. Then we have Ford, where also our position, as we can see, is currently in the red, although we have a smaller position there. And we're basically waiting for this to play out. If we look at the price level now, it might have already played out. So basically the next couple of, in this case, days, are going to be, crucial. I mean, it might still go a little bit further and so on, or a little bit sideways. But eventually in the next couple of, days or weeks, we should see then if we were right by seeing a, breakout, slowly getting up. Obviously not like this, so not like a rocket, but basically indicating that this wave 2 is finished here and we go up from here. If that happens, great. If not, we basically will potentially hit our stop loss here and take the hit there. GameStop, I mean, I've mentioned it before, Elliott Wave Theory doesn't apply that much there anymore because 76 million or even more shares of GameStop have been directly registered. Again, switching to the other camera, which one there, desk cam, there we go. Naked, Short, and Greedy is the book by Dr. Susan Trimbrad, is the book that explains direct registration, naked shorting, and stuff like that, or shorting in general, fails to deliver. And yeah, like that's why mass psychology, or one of the many reasons why, in my opinion, mass psychology doesn't apply that much anymore to GameStop. We still have a labeling here on the chart. If it turns out true or not is a different question. So I'm bullish on GameStop. So in case you're wondering, I don't know, like we hold shares in this account, although I've pledged or planned to migrate them already for quite some time to my computer share account, where I also hold shares. And yeah, eventually I'll get to that. I cannot move them, which is a pity, so I will have to sell them here at some point. Actually waiting for some recovery to start to, yeah, they don't have to, so we don't have to recover the entire 50% here. And just in case you're wondering if I have a 50% loss on GameStop, the answer to that is no, because I also made huge profits with GameStop in 2021 and was forced to close that position because one of the requirements as a popular investor is that I cannot hold more than 20 or 25% in a single asset. And when GameStop was blowing up there, eventually I had to close those positions to and then reinvest only 20, 25 or less percent than that. To stay within those requirements. You can see that right now GameStop makes 10% of the portfolio. When it was blowing up back then, it actually at some point was, I think, 80 or 90% of the portfolio. Yeah. So yeah, that's that. So GameStop, Peloton, you notice that position is gone. And that's because here we actually hit our stop loss. So here we said we have two scenarios. It's actually the first asset where we use the alternative analysis mode. So we said, okay, it's possible if we just look from October that it's labeled like this, 1, 2, although, and here it would still be okay for a correction of 2 if we look then like that. And here we're on the monthly chart. So we're going to switch also to a 2-day chart real quick. And yeah, so zoom out a little bit. So yeah, so here our idea was, okay, that might be 1, 2, 3, 4, 5 as a leading diagonal, and then now following by, and we thought that might be ABC already, which it turns out is not, because the low here is 909 and the low here is 895, which makes this impossible as a wave 1, 2, which means that we're still here in wave 2, assuming that that wave 1 labeling would be correct here. So it could be here, we could go up from here now, but we would have to try to confirm this. It's more likely then that it actually is some other corrective pattern, or that we simply are wrong with labeling this here like that. Bringing us back to, since Elliott Wave Theory is based on mass psychology, it means it applies more in indices like the SPX, NDX, and so on, than it applies in individual stocks. So in individual stocks, we will here and there run into a situation where simply we either will not be able to apply valid labeling, or where, yeah, like it might be very hard, or where, yeah, no matter how we label it or when we label it, we still end up being wrong. Yeah, like there's nothing out there that's 100% right. And doesn't mean that Elliott Wave Theory doesn't apply, or not that it, yeah, I mean, it's sometimes it doesn't apply because, again, like mass psychology requires masses to be involved. But how do I phrase it in English best? Yeah, like doesn't mean that Elliott Wave Theory is wrong, but the challenge here is, so if we switch to the desk cam and look at the cheat sheet, so it looks very simple. Again, check out episode number 1 if you want to learn more about Elliott Wave Theory, but Elliott Wave Theory looks very simple. Like you have impulse waves that are like labeled 1, 2, 3, 4, 5. And then you have like corrective patterns that usually are labeled ABC, or combinations of corrective patterns that are then, like, for example, WXY, XXZ, or WXY, and so on, which makes it look very easy. But the problem is, or the challenge is, that those patterns are actually relatively flexible. Each of them has a certain set of rules. But then there are situations where 2, 3, or more of the patterns can apply at the same time, where you then would have to fall back to using guidelines for each pattern to determine which one fulfills most of the guidelines. And that's then the most likely one. But then that could still turn out to be wrong. And then if you have, like, I don't know, 2, 3, 5, 10 more candles on the chart, you suddenly figure out, well, let's say we have something that fulfills all the rules on first glance of like a zigzag, and I don't know, or the beginning of a zigzag and a flat. Okay, that's very unlikely because they start different. Yeah, let's say we have something that has the characteristics and fulfills all the rules of a zigzag. So we assume, okay, our correction is over, but if we then look, a double zigzag has basically a zigzag in the beginning. And so it could then be we buy basically here because we assume it's the end of our wave 2 and we can buy, when then in fact it turns into a double zigzag and gives us another low here. Doesn't mean that Elliott Wave Theory was wrong. It just means that we, based on the data we have, assumed that it's this. When then with some new, and once it starts to go up, we assume that it's the part of the next wave, the beginning, when then in fact we suddenly have that downturn, and which causes us to hit a stop loss and causes our labeling as a zigzag to become invalid. But then on second glance, we realize that it actually forms a double zigzag maybe, yeah? And as a result then, yeah, it's not so much that Elliott Wave Theory is wrong. Again, there are charts where you will not be able to apply the patterns because of lack of the masses required in mass psychology. But usually when you get it wrong, it's because you labeled the chart wrong, or based on the data that you had available, you made the best possible choice. But then with a few more candles developed, there would actually have been a better choice, and you just missed it. Yeah, like as you notice, like this is the only chart so far where we have two ways how we label it. Technically, we could do that for every chart, but it would go way beyond the length of episodes that we try or aim for. So as you notice, yeah, pushing the button that we get back here. And yeah, so this labeling here turned invalid, and our second labeling actually looks at a longer range and says, okay, hey, this is 1, 2, 3, 4, 5, and 5 in development, or 4 in development, and 5 then here, where, and that's the interesting part here, is we're basically waiting for a breakout at the bottom that gets confirmed to this line here. Yeah, I'm gonna zoom in so it's a little bit easier. Let's switch to 2 day. 2 days might be too much. We have what week now? Let's go to weekly. So we're waiting for a breakout that gets confirmed, which basically we might have here. So we might touch back here and then go further down to indicate that we actually already reached wave 4, which would then put our wave 4 point here. And then we would work on wave 5. However, using Kennedy's channeling technique, which is why we have all those channels and that one trend line here, very often, but not always, that fourth wave would touch the so-called base channel here, or the median of the base channel. So we said we had one labeling that is, okay, we're going to go up. So because the original assumption for us was, okay, that's like this, and we're going to go up. And the other labeling was like, okay, even if we go down, it's not guaranteed, but it's likely that we will hit that line here, giving us also decent risk-reward ratios. In this case, our stop loss got hit. And that's that with Peloton, which means actually, well, yeah, like I can save that, but we can also remove it from here, because for now we're done with Peloton. We will look we might look at it again in the future, but instead of like trying to figure out what which pattern fits here better, which can be very, very time consuming, we basically are just going to look at another chart of another stock to try to find something that actually fits the rules better. Yeah, I hope we get to it today because we only have 11 minutes left in the stream. But after a 1 week break, I felt like it's important to go over what we had and especially cover Peloton, that we actually hit a stop loss, which means one of my trades actually turned out to be wrong. It's not the first time and it will not be the last time. Yeah. And then we have Domo. Domo, one of the reasons why I bought it is because the insiders started buying. We can see Domo is up hugely. We only have 1.3% of the portfolio invested in it, but we already made 16% profit on that position. We also have like decent risk reward ratio here because our stop loss, if I'm not mistaken, is at 11.59, where our take profit doesn't exist right now because we were expecting a breakout from here. Right now, it looks like if we are now on 2-day scale, it could be that this here, let's check what do we have here. Low 11.59, low 11.70. Could be that this here is a 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5. Yeah, of a smaller degree, which means we would now see A, B, C that probably takes us down again to 14 potentially, and then from there we then would see basically a potential increase further up, which means also at the same time, so we could switch to a lower time frame here, daily for a start, so that we get twice the candles. And then if we label this, we would say that would be, yeah, like tricky, unless that, yeah, we need an even smaller time frame here. So standard tool, what's this standard tool, So the S, yeah, and we go, let's go for 4 hours right now. And F5 to fix the waypoints. Yep, so, and then here 1, 2, 3, 4, 5, and that actually checks out. So if we use Kennedy channeling technique to draw the destination channel, so that gives us an idea of where we will end up by connecting point 2 and 4 with a parallel through point 3 and extending it, very often that fifth wave will hit the median or the top, and we hit the top here. So we're a little late to the party. So what was the high here? The high here was 62. So we could have closed it here already, but then sometimes it might go higher. Now we are back at the median, so we can actually close our Domo position for now. So basically, yeah, need the other window. So I'm gonna do that here. So portfolio, Domo, and close all. Yes, so we made 14.79%, closing it now. So, and why do we do that? We're gonna set an alert because basically what we're expecting that's going to happen would be, and we're gonna keep an eye on it in every episode. So we have our low here, low 1162, that would be the lowest point. And we have our high here, high 1253, 1239. So that would be our high. And here we have an ABC. That would be wave 3, 4, and then wave 5 is not this one, but we actually have our wave 5 here. And now we are basically waiting for this here to become an ABC, and our point C would ideally, let's add a Fibonacci retracement here. So retrace up, back, so move the dot. So our Fibonacci retracement would be probably 1360, 3073. So hi Akashi. So that would be the point, and I'm actually gonna set an alert for that. So in the where was the alert button on eToro? Set price alert. So 13, I would say 1375 is where I'm setting my alert. And with that, we have an alert in place. So if we turn out to be right, we basically save ourselves the downwards journey that should get us somewhere here. So like 1360, so like wave 4 territory. And if we turn out to be right, then from here we can buy again and then actually experience wave 3. That then eventually, for that we'll have to zoom out a little bit because obviously this wave 3 here goes much further. So let's drag that somewhere. So yeah, again, we're talking long term here. So just did a trade on USD on a margin of 110, got profit of $4 on that forex app. Congrats. Like, how's your portfolio looking there? So like last time it was what, $115 already, or $107 or something like that. So already a decent more than 20% profit in just a couple of weeks. And yeah, circling back, so while I wait for Akashi to answer here, so in case you're wondering, so if you watch this later, sorry, and you don't want to see the chat, so he said, just did a trade on the Euro USD. So that's the comment that I answered. And yeah, so for Domo, I'm still bullish because again, since 2018, it's been the first time in March that insiders bought, but also while I'm confident, or while I'm willing to ride out the upwards movement here before we go further down, with Domo, it really looks like this turns out as like, okay, that's a finished impulse wave. So now we have a corrective wave happening. And yeah, it might not go as far. We actually might have our alert already earlier. We might miss out on some further profit up here. But at the end of the day, considering that our Peloton position hit their stop loss, I'd rather like also bag a win in between. So yeah, there we go. And Peloton, that's a little bit of a pity. We didn't have like, we had a great risk reward ratio overall, but the risk there was like 20%, where our Domo position right now was 14.5 and 15.6% for the two separate positions. So yeah, like a pity here, but yeah, like can't always be right. And unfortunately, Unfortunately, that for today. So if we now go back here to the portfolio, see Domo is gone. And so if we look at the history, you can also see, so well, that one really kicked us, although the position size, what position size did we have here? It doesn't show it here. Okay, they were both actually equal. So yeah, like we're looking at a net loss, which we can indicate from here. But yeah, like so. Unfortunately, we only have 5 minutes left, 4 minutes left in today's stream, so we won't get to jump into anything new today. Yeah, so this episode basically just serves as a recap, and we'll have another episode tomorrow at 3:30 p.m. as usual, where we then will skip the recap, and unless something really major happens throughout the rest of the day, and then just pick our next stock from the event calendar or economic calendar. Probably, I don't know, like Apple, I'm not sure. I think we looked at Apple, and there we are not, I think we made an episode about Apple already. Like it was actually the last one, episode number 13, which was on the 13th of April. And there the conclusion was that right now, while it looks that the upwards movement is still ongoing, if I recall it correctly, we are not able to, without a doubt, label it. So it's not like we're not able to determine, right, or I'm not able. Somebody with more experience with Elliott Wave Theory for sure is able to point out a potential price target or a turnaround point. But I personally am right now not, so we stay away from this. We might look at Square or at Intel next. Maybe pick Disney or something. Like they are all up, going to release their earnings report. Okay, Intel is just dividends, but it feels like, or in my opinion, it makes sense to look at them before the earnings, because that usually is the area where we can expect bigger movements in quotes, which then also means like if they are still in a wave 2 pattern where we would expect a breakout, then looking at it before the earnings would mean that maybe the earnings then mark that wave 2 end going up. And like vice versa, if they're currently moving up, then the earnings might prove the point of, okay, here we're going to turn around again. I mean, obviously not on a small scale, but on a bigger scale. So yeah, doing it this way seems like the right fear. Someone more experienced on eToro than you, where do we find that? Yeah, I mean, on eToro, yeah, like that's different. I said someone more experienced, maybe I misspoke, someone more experienced with Elliott Wave Theory than I am, yeah. But there are also people that are longer on eToro, yeah. So like, for example, one very popular investor is one girl currently managing still, where the stats, still managing $2 to $5 million of customers or copiers, yeah, with long-term performance. So like started years before me, and obviously with her buy and hold strategy had a couple of good years, but basically last year where I had a record profit, she had her record loss. Is it true that they deduct the fee when you copy someone's trade? I'm gonna say no. I'm not 100% sure on that one though. Yeah, so that's the next question here, because basically eToro has very little fees. If you trade crypto or invest in crypto, then you have fees. If you don't quote me on that, I'm sharing my opinion here, what I remember from the fee structure. Yeah, I might be missing something, but so if you deal with crypto, you have fees. If you deal with CFDs, so contracts for difference, like when we invest in the where did we have it now? Oops, wrong button. Not history. When we invest in the SQQQ or SPXU, so then that's a CFD where we might, or where we have to pay depending on which direction things go and so on. We either might, or we either get interest or we pay interest or something like that. And then there are some withdrawal fees if you are not on a certain membership tier. So that is based on the balance that you have in your account. But other than that, eToro has really low fees or next to no fees at all, yeah, in most cases. So, but there are some cases where you end up with paying fees. As for copying, you don't pay a fee. What happens is if you use the link in the chat that's pinned there, or like in the video description or so, and you say, okay, I'm gonna copy Christian, and then you say I'm gonna copy it with $200, then what happens is either if the markets are open right now, then it will copy right now, or if the markets are closed, it will copy then in an hour or so, yeah. And then if we look at things, you see there's a small difference between the prices. So in the background, you see the price and you see the price here, and that's called the spread that you have, like in crypto, between buying and selling. So if you want to buy something, you pay a little more. If you want to sell something, you get a little less. And so when somebody starts copying another user, and you say you want to copy all my open positions, which makes sense since I'm holding them long term, then it opens all the positions for you. And when the market right now is open, for me, the price right now is 4,137.08, for example. And for you, however, you get it a little bit, you get it for a little bit more. And that when you then start copying, it means you start with a very, very small loss. It's not a fee, it's simply the spread because you're opening new positions. So I hope that makes sense, yeah. But outside of that, eToro really has very, very little fees, yeah. And I know there are enough people out there hating eToro, yeah, but personally, I really like its ease of use. And while you have to be careful with like who you invest in, so I'm not saying that I'm the best choice for everyone, yeah. You can go to Discover and you can look for, there's a section for copy trading, and you can look at the different profiles and see, okay, how they are doing. So that one has a great year right now, and even handled last year well when a lot of people were losing money, yeah. So, and then always double check the chart. So because here, so from 1 year performance would be from here to here. It actually looks like, hey, last year 12%, this year 8%. But obviously, if you got in last year in June, you see here, then you actually would still be at the small loss right now, yeah. So because of that bad month that he had there. So looking at swings, like how good are things, how bad are things. So like I'm not judging that particular popular investor, but in general, if you see that there is like months with -10, -15, you should also on the other hand see a decent number of months that have that in profit. Yeah, so that's like like not a guarantee, but a sign that okay, it's just a little bit of riskier or more volatile investment. But while there are like some months where you get hit harder, the profit months are then also higher and so on. But yeah, so basically, a lot of options there, no specific fees other than the regular spread that you would have to pay when you start copy trading. And yeah, like, so I guess that's pretty much it for today. So I said like, anyway, like getting into overtime already, and still have a few other things and a call scheduled in like 20 minutes or so with a new freelancer that we might hire to manage our spread church stores. So tomorrow we're going to pick another stock to look at. I said probably Square or any of the other companies that have earnings upcoming in a month. And for today, that's then it. Thanks everyone that tuned in. As usual, thanks Akashi for stopping by for the episodes of Daily Market Mastery as well. And yeah, see you all then in another episode tomorrow. Till then, bye-bye.